All right, if you're just joining us, welcome. Good afternoon. We're here to discuss, as mentioned, the basics of DPAs. It's one of our favorite quarterly webinars, DPA 101. What we'll be talking about really is what down payment assistance programs have in common, how they're different, and what you all need to know, right, to start conversations about down payment assistance without necessarily being a program expert. However, leveraging what you hear today, what you learn today, will put you up there. So looking forward to it. My name is Will Medina. I'm part of our DPR team. And with us today, we also have Tracy McIntosh, our customer success manager, Lori Johnson, our customer success specialist, and Keith Futrell, one of our DPA program specialists. The entire team will be answering questions in the background. So feel free to engage with them as we go. We always ask that you use the Zoom Q&A feature for any specific questions, but obviously if there's any networking going on, feel free to use the chat. We're also monitoring that as well. And just as a quick note, a recording of today's webinar will be shared with everyone. So, a quick bio. Down Payment Resource was launched in 2008 to help solve a problem that drove a lot of people in real estate and mortgage lending crazy. There was no easy way to find, let alone track, homebuyer assistance programs. So the team at DPR stepped in and developed an easier way to connect eligible borrowers with hard to find resources like down payment assistance programs, grants, mortgage credit certificates, and other forms of assistance, as you'll see. We also provide tools and down payment assistance program information to real estate agents, loan officers, and ultimately consumers to help all of you find and better understand the down payment solutions that are available for your buyers. Ultimately, what we like to say is we are here to help you connect home buyers to the down payment help they need. So today we will be discussing, as mentioned, the basics of loans, grants, tax credits, and other forms of home buyer assistance programs that can help eligible buyers achieve the down payment faster, cover closing costs, and get them into a home sooner than they would have otherwise. So let's take a look at the current state of these programs. Of all the homebuyer programs out there, 74% are some sort of down payment or closing cost assistance. Now, we like to say that that's really a catch-all category, and we'll certainly dig deeper in a few minutes, but it's important to know that not all DPAs are the same. 81%, for example, have deferred payments, meaning you don't have a monthly payment on the DPA loan for some period of time. 53% are forgivable, partially or fully, essentially becoming a grant over time. And 51% are both deferred and forgivable. And not to mention, there are still other DPAs that are considered true grants at closing or may be repayable monthly after closing. Now, we'll explore each program type in more detail, as well as the affordable first mortgages and tax credits, or as they're also referred to, mortgage credit certificates, in a moment. So, we always get asked where exactly these programs are located. And the quickest answer to that is these programs are everywhere. Obviously, there are some markets that have more homebuyer programs than others, as you can see in the infographic. But let's not forget that there's a state housing finance agency in every state, and their programs are available statewide. So there's literally no county or market in the country where there isn't at least some form of down payment assistance or other form of homebuyer assistance. Now, who offers these programs? So I mentioned that every state has at least one housing finance agency. There are city and county governments that often have community or economic development departments or housing authorities. A number of nonprofits like NeighborWorks and Neighborhood Housing Services and others operate in markets across the country with varying programs. Many employers, such as municipal governments, hospitals, universities, also offer their employees some form of down payment assistance. Now, there are also community action agencies, community land trusts, and so many other organizations out there all trying to open new doors to homeownership and promote housing growth and responsibility in their market, which is also your market. And they've all got funded and available down payment assistance programs. So we always like to take stock of current DPA trends. Demand we see remains through the roof, and we'll be looking at some slides that will actually, show you some figures with respect to that. DPA providers are continuing to increase assistance amounts. There are income limits and purchase price limits that are continuously adjusted. All of this to help more home buyers in today's market. We're still seeing new state and local programs that continue to launch in markets across the country, and approximately 80% of all DPAs remain funded and available. So there's obviously so much more attention. I guess there's always been attention on how to address affordability and down payment assistance now than in many years. So it is safe to say that these programs are available and are not going away. In fact, as I mentioned, our recent Q2 2025 Homeownership Program Index report showed a continued rise in the number of available and funded homebuyer assistance programs. What are we talking about when we say continued rise? Well, 45 programs to be exact were added last quarter, which brings the total of programs to over 2,500, which is the highest number of programs DPR has recorded. And if you've been in any of our previous quarterly webinars, you will continue to hear that we are setting records consistently. We know the need is out there. These providers know the need is out there. More programs, as I mentioned, are coming to markets all over the country, which offer you more opportunities to help new buyers. We also noted growth in employee-sponsored programs, which are also referred to as employer-assisted housing. We talked about municipal governments, hospitals, universities, right, offering some of these incentives to their employees. Obviously, certain requirements apply. Programs that are offered through local providers, hence the growth, and also programs operating in multiple states. We continue to report on assistance programs that expand inventory options for home buyers, which include support for manufactured housing and 2 to 4 unit properties. The caveat being so long as they are owner occupied. And just since last quarter, there's been a 4% increase in programs that allow for manufactured housing and a 3% increase in programs that support multifamily purchases. Now, all of these programs share some basic universal requirements. As an example, they are only for owner-occupant buyers. These are not for vacation homes or investment properties, although in some markets, the assistance may be available, as mentioned, to buyers of 2 to 4 unit properties, as long as they will occupy one of those units. All the programs still require some minimal investment from the buyer to keep a little skin in the game, as they say. The investment can take the form of monetary investment, which, as we know, can range from five to maybe $1,000 or perhaps even more. The buyers, let's not forget, are also investing time, for example, by completing their home buyer education requirement, which buyers will typically have to complete this home buyer education requirement course to qualify for a down payment assistance program. And of course, these are not cash buyers. We are talking about buyers financing their home with a mortgage, so they must also qualify for that mortgage as well. Now, with those universal requirements in mind, let's take a look at the three most common types of homebuyer programs and what's unique about each of them. Now, the three most common types of homebuyer assistance programs are the down payment assistance program, the affordable first mortgage, and the mortgage credit certificate. Now, there are variations and certainly many other names for each type of program, and that's what will help clarify as we learn how each one works. And remember that as we go, no two programs are exactly the same, but we're going to learn the basics of each type so you can understand at a glance what the options are. So with that, let's begin reviewing down payment assistance programs. Down payment assistance programs are by far the most common type of homebuyer assistance in most cities. Every state has a housing finance agency, which is the housing division of their state government, and just about all of them have some form of a down payment assistance program, as well as local government and nonprofit program providers who offer DPAs. These programs are typically grants or silent seconds that offer down payment assistance of several thousand to tens of thousands of dollars to eligible buyers for down payment help. Now, just some brief examples here, right? Grants, what are we talking about? gifts that do not have to be repaid, repayable seconds, funds that are provided at closing that may or may not accrue interest, and the loan could range from 5 to 30 years with varying repayment terms. Silent seconds, deferred seconds, where repayment of the original amount is postponed until one of several events occurs, commonly when the borrower sells, refinances, or there's a change in occupancy. And that refinancing piece is also very specific, as some programs do allow, at least for a rate and term refi, um, and forgivable seconds, where some or all of the original down payment assistance is forgiven. How does this break down? Often a percentage of the loan is forgiven each year for a predefined number of years. As an example, it's common for a forgivable loan, a DPA, to be forgiven, let's say 20% per year over the course of 5 years. Often, down payment assistance programs also allow the funds to be used for, let's say, closing costs, prepaid expenses, rehab or repair expenses, which we know can be particularly important to enhance a property or accommodate livability standards for disabled buyers, and even loan principal reduction. All of these uses taken into account, right? They all help the buyer shed the costs of purchasing and financing a new home. And we're still seeing even more programs allow their funds to be used for temporary or permanent interest rate buydowns. Now, one of the most common misconceptions about down payment programs is that buyers must be first-time buyers. In fact, as mentioned, there are over 2,500 programs across the country maintained in down payment resource, and 40% of them have no first-time homebuyer requirement. Yes, no first-time homebuyer requirement. And beyond that, most programs adhere to HUD's definition of a first-time homebuyer, which effectively states that you are a first-time homebuyer if you haven't owned a home in the last 3 years, with still more exceptions to that rule for widows, divorcees, displaced homemakers, and other circumstances. But in just about every market across the country, we see programs that either waive the first-time homebuyer requirement, let's say in targeted areas. They make exceptions for veterans or certain professions, or as mentioned, they just don't have the requirement at all. Now, while down payment assistance comes in many forms, they all help the buyer reduce the down payment burden. They open new doors to homeownership, and they also help pocket a little extra cash up front and along the way for other homeownership obligations. Many of these programs are grants, meaning they are interest-free, payment-free gifts to buyers who meet the eligibility requirements. Of course, others may bear interest, but they defer the payments for the life of the loan until, let's say, sale, or even better, until the affordability period expires. So, as an example, many programs stipulate that the buyer occupy the property for a certain number of years. Let's say that'll range from 3 to 10 years, as an example. And then the lien is forgiven, essentially becoming a grant. And for those programs that are not grants, many will take second or third lien position to allow for layering of additional assistance programs. So let's look at the eligibility requirements, which most have the following. Eligibility will depend on the program and the funding sources. That is key. Income and purchase price limits are always market adjusted, often based on calculations for the area median income, AMI. But basically, they all have income limits ranging from 80% all the way up to 140% of AMI, sometimes even higher, which has been, which we've seen will creep into six-figure incomes in many cities. They typically have sales price limits too, but those are usually in line with HUD's loan limits in each market, offering assistance at or beyond median home price values. The location of the property is critical, as each program, especially at the city or county level, offers assistance within specific boundaries, such as city or county limits. But it's important to remember that the programs from your state housing finance agency offer assistance statewide, which means that they cover the entire market. We even have some nationally available programs integrated into down payment resource. Now, some programs have more needs-based eligibility criteria that involve an evaluation of each buyer's scenario and assistance needs by the program administrator. So as an example, most programs will mirror first mortgage requirements, requiring a FICO score of 620 or higher. Homeownership history also makes a big difference. Many programs are only for first-time home buyers, but there are many for repeat buyers or even current owners. And of course, it's important to remember that a first-time home buyer is simply someone who hasn't owned in the last 3 years. Now, I'll expand on eligibility as it pertains to military service and certain professions in a few moments, but both can open new doors to assistance that may not be available to the general public. Ultimately, these programs reduce the buying cost for a buyer and expedite their timeline by offering down payment or closing cost help that enables a buyer to reduce their out-of-pocket expenses and retain their liquid savings. That is extremely, extremely important. As an example, think about someone obtaining, let's say, an FHA loan. You got to put 3.5% down. If a DPA program helps them bring more to the table and instead qualify for a conventional loan at 5% down, this effectively lowers the monthly payments and the long-term financing cost. Specifically, an FHA mortgage that has expensive upfront mortgage insurance premiums and higher monthly mortgage insurance costs that last the life of the loan, whereas conventional mortgages have no upfront mortgage insurance premium and lower monthly insurance premiums that can be canceled once the buyer gets to 80% loan to value. So when you reduce loan to value, you also lower debt to income ratios, which help more buyers qualify and increase their homeownership possibilities. Most importantly, it increases the purchasing power of a buyer's income, allowing them to more readily qualify for the home they like, and in some cases, qualify for a little extra home to suit their family needs. Of course, reducing monthly payments also allows for, most importantly, a little extra cash every month to be put right back into savings, which has been shown to improve default rates. Now, many down payment assistance programs require the borrower uh, complete a home buyer education course, which provides valuable information about the home buying process and the resulting responsibilities of home ownership down the road. This better prepares potential buyers for the obligations they face as owners and the steps they'll have to take to get there, ultimately enabling them to be better clients and more adept decision makers for you along the way. And more down payment providers are offering online education options for their homebuyer courses. The material is typically in line with HUD certified homebuyer education. Most courses are simply an 8-hour class that can be completed on a Saturday or during a few evenings of online sessions at the consumer's discretion. This allows buyers to work ahead towards down payment assistance pre-approval and hit the market as more competitive and informed shoppers. And most importantly, these buyers are far more likely, according to HUD and the Harvard Joint Center for Housing Studies, to be successful owners down the road. Default rates are significantly lower when homebuyer education is completed before closing. Now I'd like to take a look at another of the most common homebuyer programs, the Affordable First Mortgage. Affordable first mortgages are additional mortgage options typically only available through a state or local housing finance agency. The most common benefits you'll see are below market interest rates, reduced mortgage insurance costs, and allowances for higher loan to value. As an example, Fannie Mae's HFA Preferred and Freddie Mac's HFA Advantage offer reduced mortgage insurance below a standard conventional product, all with a higher loan to value. You can typically combine these affordable first mortgage products with down payment assistance and or tax credits from actually those same housing finance agencies. Affordable first mortgages help further reduce the cost of homeownership for new buyers by lowering monthly payments through lower rates or mortgage insurance pricing, helps increase the purchasing power of each buyer and can potentially expedite homeownership for them, getting them into a home sooner than they would have otherwise been able to. And with that, let's take a look at the third most common homebuyer program, the mortgage credit certificate. A mortgage credit certificate, or MCC as it's also known, is available from state and local housing finance agencies in some states. Not every state offers an MCC, but if there is one in your market, we ask that you take a look. They are a great benefit for home buyers. This offers a federal income tax credit of up to $2,000 per year. Eligible buyers must get an MCC prior to closing and then get to use it every year for the life of their mortgage. The tax credit helps offset part of the mortgage interest costs, and the borrower still gets to deduct the rest of the mortgage interest paid each year. MCCs help reduce a buyer's federal income tax liability by offering, as mentioned, a credit for mortgage interest paid. There are some providers that will allow a lender to take the MCC credit amount and actually annualize that over a year to increase a buyer's qualifying income. And some MCC providers will also reissue an MCC through a future refinance. So let's take a look at an example of how a mortgage credit certificate works. Let's take a $200,000 home. The buyer closes and they make 12 payments in the year. So they've paid 4% interest, so 8,000 in interest in that year. The MCC allows you to claim 25% of the mortgage interest paid as a tax credit. So in this example, $2,000. But the homeowner still gets to claim the rest of the 6,000 of mortgage interest paid as a tax deduction every year. Now, we like to see this actually take place in real life, right? So, like, what does working with home buyer assistance programs look like? And we have a great example here. It was a recent case study in collaboration with Loan Depot. The case study details the success originator Mosey Gatling had engaging partners in exploring affordable mortgage solutions for home buyers. The visual is regarding the layering of two Nevada Rural Housing Authority programs, a down payment assistance program and a mortgage credit certificate, the caveat being, of course, if conditions permit. The example depicts the potential savings when exploring these affordable mortgage solutions for your home buyers. So let's wrap up this breakdown of the most common homebuyer programs with a few other important scenarios where there may be additional or unique benefits to help your clients. There are many programs that offer additional or unique incentives to buyers purchasing in targeted areas. These areas are areas with higher foreclosure rates, vacancy rates, unemployment rates, or parts of town most in need of community investment, right? That they've been targeted. Um, Typically, there will be no first-time home buyer requirement. The assistance amount may also be increased, and the income limits and sales price limits may often be higher. The idea here is to promote homeownership in revitalization areas, particularly so that core service providers and professionals can live where they work. These targeted areas are all over the map, not just in big cities. The areas are usually bounded by specific cities, zip codes, census tracts, or sometimes even entire counties, right? We've seen some consortium of counties all grouped together. Now, there are also special programs available in many markets that target certain professions, typically teachers, educators, police officers, firefighters, healthcare workers, and municipal employees. As an example, in Georgia, the state funds the Georgia Dream program that offers 10,000 in down payment assistance to eligible buyers, but teachers, police officers, and nurses can get an additional 2,500 for a total of 12,500 in down payment and closing cost assistance. Now, the idea behind these programs is to enable homeownership among local core service providers. And many of these programs have very broad definitions of terms like educator to include not just classroom teachers, but expanded to public school system employees at large, like paraprofessionals, librarians, school nurses, or the term protectors. Could include police officers, but also sheriff's deputies, corrections, and probation officers. Another targeted audience of eligible buyers is our armed forces active duty personnel and veterans. There are so many programs out there that waive the first-time homebuyer requirement for veterans. Some offer higher assistance amounts as well. Many of these programs can be used in conjunction with VA loans and ultimately offer our veterans a little more flexibility to become buyers despite homeownership history. Some of these programs offer the same or similar incentives to active military and Guard or reserves members as well. So we've given you a lot of information today, but we want you to know how to access all of these DPA programs, once you leave today's webinar. So I'll be showing you a number of ways that you can access DPA info and start to enhance your marketing, right? Start to reach these prospective home buyers. So anyone here today can go to downpaymentresource.com and run an eligibility search for free anywhere in the country to see what is available out there for you or your clients. If you're an MLS partner with Down Payment Resource, we identify eligible listings in your MLS and match them to all available home buyer assistance programs. And we provide these matching tools in your MLS agent and client portal reports. You also get Down Payment Connect for free through these MLS partners. So we ask that you check out DPR, let your clients know what's available, and talk to your lending partners about which programs they offer. And let us know if you have any questions along the way. We are continuing to onboard MLSs, and several more will be launching DPR in the coming weeks. Now, if you're a member of one of the partner MLSs, when you are logged into your MLS, we ask that you look for our down payment resource button on eligible listings. You'll see these down payment buttons on your agent reports as well as in your client portals. Click it, and we will tell you or your client which programs are available for properties that they like the most. Down Payment Connect is free for members of our MLS partners. If you're an agent and not a member of one of those MLSs, no need to worry. You can absolutely subscribe to Down Payment Connect for your own DPA search page and lead generation tools. And loan officers, we have a version for you as well, which allows you to control which programs consumers see so that you are better aligned with the product offerings within your company. You might be asking, what is Down Payment Connect? Down Payment Connect allows buyers to complete a program search from your personalized link. This provides you with the opportunity to generate leads by engaging and educating new buyers about the down payment assistance programs available in your market. You can use your Down Payment Connect link on your website, your email marketing, and across your social media. And just to be clear, you are not buying leads with Down Payment Connect. You are taking advantage of our unique DPA eligibility platform to generate your own leads. And nobody else gets your leads, just you. So we encourage you to get creative and reach more buyers and educate them on these amazing opportunities. We'd also love for you to join our growing Facebook group, Down Payment Insiders. There you can join over 14,000 real estate agents, loan officers, housing counselors, and even DPA providers. Yes, they are in there. They want to network as they all discuss best practices with down payment assistance programs, first-time home buyers, working with lenders, learning from each other, marketing leads, so much. Conversation is always going on. You can listen in and learn or participate in the dialogue and engage with your peers. And as mentioned, we've seen that it's also a great place to network and connect with loan officers that offer down payment assistance programs within your market. We hear that a lot. Where can I find loan officers that work with DPA? That's one place. I'm sure today you've been chatting amongst yourselves, networking. Please join the group. So I'll leave you with a case study that illustrates just how important DPA info is for realtors and home buyers. Amber here was a new agent in Florida. No one was helping her peers understand down payment requirements as many of them began to explore homeownership. So Amber stepped in, learned all about down payment assistance programs, and that helped build her business serving those same buyers. Like Amber's clients, DPA customers become customers for life, right? Help tell their story, help them, and they will refer their family members and their friends. So, in closing, please feel free to reach out to us with any questions. We are certainly here to help you and your clients find the assistance they need. We can be reached at info@downpaymentresource.com. Our website is also listed, downpaymentresource.com. We are going to be sticking around for any additional questions, some Q&A. So thank you all for joining us today. Team, uh, anything you would like to add? Any questions?
Hey, Will, this is Tracy. First of all, great job as always. Secondly, I would like to just let everyone know that you will be getting a copy of this recording. The recording will also include the slide deck that you have seen today. We've had lots of questions about that, as well as if you're allowed to share images and things like that. Some of our images on the slide deck and stuff like that, you are absolutely welcome to share some of that information. We just ask that if you are utilizing any of those images and things like that, that you just obviously reference us at Down Payment Resource as the source of that information. I do also want to let you guys know we've been getting a few questions in from some of the attendees who are members of an MLS partner that we have here, that we have as a partnership. Um, and if you do have that partnership, definitely log into your MLS. The only way you can access your free Down Payment Connect is by the MLS. You have to be logged in order to get to it. And then you will be able to see lots of information and get those leads once you get that URL put out there and distributed. I did have a question in Q&A that I was actually typing up and answering, but I'm just going to go ahead and answer it live. This is from Lyndon Dallas. I saw your question that you are a realtor connected with Stellar and you are also a loan officer. So your question was, can you modify your down payment connect in order to make it a loan officer version? And I will let you guys know for anybody else that's on here, unfortunately, when you have a free version through the MLS, it has to only be an agent version. There's no way for us to adjust that. You will be able to still utilize it to get leads, to search in the MLS listing data to see if DPA is available at a specific property and things like that. But you can't adjust your specific down payment connect to be a loan officer version, which only means that you won't be able to modify the programs that are visible to your consumers so that it's only DPA programs that you work with. The only way to do that is either if the lender that you work with is also a customer of ours and they utilize the consumer portal, then that will be customized to specifically what that company, what that lending institution allows for DPAs. Or if you do the paid version of Down Payment Connect and get the loan officer version where then you can manually adjust that. So um, I do see a couple other questions. If you don't mind, Will, I'm going to answer that real quick because Dee Dee and the thing specifically asked me, I may have missed this. Are the Down Payment Connect links unique URLs to each agent and with a landing page? Yes, Dee Dee, they are unique. Everyone, whether you are getting a free version through your MLS or if you are signed up as a paid Down Payment Connect user, your URL is very unique to you so that the leads come to you and only to you. So those are not going to be sold. They're not going to be distributed to anybody else. You receive those leads, you follow up with that contact. If you don't, nobody is following up with them. So it only comes to you. And I'm going to give everybody else to have a chance to chime in, but I'll go ahead and keep answering some questions in the background.
Thank you, Tracy. I certainly appreciate that. There's a really good question here. When you say you haven't purchased a home in 3 years, does that apply to someone who currently owns a home and is looking to purchase a second home? No, it just means that you have not had ownership within those 3 years. However, as mentioned, there are certain programs that allow you to apply as a current owner. However, the caveat may be you have to sell prior to closing on your new home. But typically, the 3-year rule is that you haven't been a homeowner for 3 years. Mm, With the restrictions placed on us by the lawsuit last year, can you tell me how this can be advertised on our individual listings? Heartland Metro MLS has told us we cannot put in remarks of our listings using down payment assistance available. From a just from our perspective, obviously it's marked internally. Like if you're a member of one of our partner MLSs, right? We will let you know which homes qualify for home buyer assistance programs. However, I may ask uh, part of our customer management team here, but um, I think if it applies to the details in that listing summary, as you had mentioned, Tracy, do we have anything specifically?
So
I mean, I'm
yeah,
assuming it
well,
would be whatever they.
I'm gonna
Mhm.
chime in here. I'm not sure what Marvin, I saw your question. I'm not sure what the lawsuit restrictions are and things like that. Um, but
I think
your
they're.
question does say uh, that you're not allowed to note that down payment assistance is available on a listing. I'm assuming that means for your social media advertisement and things like that, because Heartland MLS is one of our partners. So within the listing data, it will be flagged to let you know if down payment assistance is available. Now, all of our MLSs are set up a little bit differently, and each MLS chooses how they want to display that information. I don't know off the top of my head how Heartland specifically has that displayed, but you're going to see that integrated within the listings themselves. And you do have Down Payment Connect available to you. So when you log into your MLS, if you look for down payment resource, it's usually under like external links or something like that, or yeah, something along those lines. You'll be able to click on that, and that takes you to your Down Payment Connect, but it is also integrated within the listings. So if you want, you can email me at info@downpaymentresource.com. And we can chat about this a little bit more specifically with what's going on with you, and so that I can try to help you out with that
Thank you,
afterwards.
Tracy. I will add here. I saw that Lori had responded, and it's obviously probably extremely important, yeah, to check in with your managing broker, what you're able to enter into your MLS. That would
Mm,
be a
I've
great
had
point.
listings before that my broker has said wait a week and then put it on the MLS, like because there's certain flagging that happens. Um, I'm sure that it has to do with what, you know, follow your broker's instruction to see what you can and cannot get away with is would be my best advice. Sorry to chime
Thank
in.
you, Lori. No, 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 no.
Yeah.
Thank you. This speaks to the expertise on this team. Again, housing industry experts. So we certainly welcome all of it. But as you know, Tracy mentioned, if it can't be answered today, just reach out to us, and we will certainly try our very best to get you the answer. Let's see here. What should I first do after this session to study? What would you do to focus on? Simple 5 steps to work on. If you're referring to, I guess, continuing to increase your, knowledge and experience with down payment assistance programs, honestly, one of the best things that you can do is if you're not a part of our MLS, use the search eligibility tool to maybe find one program in your area. Go ahead and, jot down the phone number, the organization's name, and reach out to them. Familiarity is your best friend. And we hear so many times from these organizations just how much they love to connect with you all as housing professionals, lenders, real estate agents, right, to better inform you and educate you about these programs. So we always like to say, start with one, right? Kind of get your feet wet, figure out what the requirements are. If there are any participating lenders, go out to them, meet with them. Or you can also start, meeting with local lenders and see what product offerings they may have and familiarize yourself with those down payment assistance programs. Obviously, today was rather broad, somewhat specific as well, because we're talking about, three of the most common types. But there is a type. There is a type. There's a type out there. It may not be what we touched on fully today, but you'll know once you connect with these other housing professionals in your local market. So I would say start with that. See what's available nearby. Okay, so somebody's answering that question. That was a great question. I really appreciate that. Let's see the chat. Okay, I see we are wrapping up a few answers in the Q&A. We can't thank you enough for joining us today. Having these quarterly is certainly a joy for us, and we hope for you as well. If you know anyone that has never sat in on one of these webinars, let them know. Um, you can sign up on our website under the education tab, where there are other webinars that we as a team host as well. Tracy does a wonderful job. And obviously, our entire team is here to answer any questions for you. So, with that, we will certainly bid you farewell. Of course, reach out to us with anything, and we hope to see you again at one of our next webinars.